Hey everyone, LJ here with LJ Realties. In this video, I'm breaking down the Q2 2026 Montreal real estate market. We'll go through what actually happened in the second quarter of the year, what the numbers are telling us beneath the surface, and most importantly, what this means for you, whether you're a buyer, seller, or investor. As always, this is data-driven, no hype, just boots on the ground insight from the Montreal market. Let's get into it. Let's start with the Grater Montreal Area. Overall, in Q2 2026, total residential sales came in at 13,365. That's down 7% compared to Q2 2025. New listings increased 7% to 20,735, and active listings climbed 14%. So, on the surface, it might look like the market is cooling. More supply, fewer sales, but here's what you need to understand. Prices are still rising. The median price for a single-family home is now $645,000, up 3% year over year. Condos are at $430,000, up 1%, and Plexes hit $874,000, up 5%. On top of that, days on market dropped in 2 of the 3 categories. Single-family homes are now selling in 32 days, down 3 days, condos at 48 days, up 6 days, and Plexes at 43 days, down 6 days. The headline here is simple. Transaction volume is softer, but prices are holding. That tells us supply is rising, but demand hasn't collapsed. Buyers have a bit more breathing room than they did a year ago, but the market is not correcting. This is not a slow market. It is a more balanced market than we've seen in a while, and how you position matters more than ever. Let me break this down by category for the Montreal metropolitan area, because that's where the real story is. For single-family homes, sales were down 6% to 7,042 transactions. The median price is up 3% at $645,000. Active listings are up 9%. Days on market dropped 3 days to 32. This segment remains firm. Family buyers are still active. The fundamentals here are solid. Well-priced homes in good areas are moving fast. Now condos. Sales dropped 10% to 4,975. The median price is essentially flat, up just 1% at $430,000. Active listings surged 20%. Days on market are now 48, up 6 days from last year. This is the segment where buyers have the most leverage right now. More choices, more time to negotiate. If you're a condo seller, pricing needs to be sharp. Overpriced units are sitting. Correctly priced units are still moving. Now for Plexes. This continues to be the standout story of 2026. Sales were down 5%, but median price is up 5% to $874,000. Days on market dropped 6 days to 43. Investors are disciplined right now. But when a well-priced Plex hits the market with solid fundamentals, it still moves. The asset class continues to be supported by the rental market, and that's not changing anytime soon. If you own a Plex and you're thinking about selling, now is the time to have that conversation. Now, let me give you the geographic breakdown, because the story is very different depending on where you are. Starting with sales by region year over year. The South Shore was down 3%, Laval was down 6%, the North Shore was down 7%, and the Island of Montreal was down 10%, as well as both Saint-Jean-sur-Richelieu and Vaudreuil-Soulanges were down 11%. Sales are down across the board. But again, let's look at prices, because that's where the truth lives. The North Shore saw the strongest home price growth of any region, up 6% to $600,000. That's a significant move for a market that was already performing well. The Island of Montreal saw home prices climb 4% to $834,250. Condos held flat at $483,000. Plexes up 4% to $910,000. The island remains a deep seller's market, especially for ground level properties. Laval had home prices up 4% to $633,500. Condos up 3% at $428,000. Plexes continue to perform at $898,000. Laval is still one of the tightest markets in the region. Heading over to the South Shore, we saw home prices rise 2% to $648,500. Condos up 2%. Plexes up a strong 16% to $825,000. That Plex number is notable. South Shore investors are paying attention. Vaudreuil-Soulanges held flat on home prices at $627,000, with condos up 1%. The pattern is consistent. Fewer sales, but prices holding or rising. And in some categories, meaningfully rising. That's the hallmark of a constrained market, not a declining one. If I'm calling out 2 areas to watch closely right now, it's the North Shore and the South Shore. Both continue to be sellers' markets with price appreciation that outpaces the broader metro. Let's talk about the fundamentals, because this is where the long-term thesis lives. The vacancy rate in Montreal sits at 2.9%. Average rents are now $1,346, up 14% from last year. That kind of rent growth directly supports Plex values. It also reminds buyers who are on the fence that renting is getting more expensive, not less. On the mortgage side, Q2 2026 brought meaningful rate relief. The one-year mortgage rate dropped from 6.14% in Q2 2025 to 5.49% in Q2 2026. The 5-year rate moved from 6.27% down to 6.09%. That improvement in borrowing costs is real. It's putting more buyers back in the market, and it's the single biggest catalyst for what we expect to see in the second half of the year. On the labor market side, the unemployment rate came in at 6.7%. The employment picture is stable. Consumer confidence improved, with the proportion of people who said it was a good time to make a major purchase rising to 13% from 11% last year. And housing starts remain constrained. New construction is not keeping pace with demand. That structural supply gap continues to support prices across all property types going forward. Let me give you my read on each group. If you're a buyer, this is arguably the best window you've had in 2 or 3 years. More inventory, better rates, less competition on certain properties. The segments where you have the most leverage right now are condos and certain suburban markets. But in single-family homes and plexes in core areas, don't assume you have time to waste. Well-located properties with good fundamentals are still moving quickly. If you're a seller, strategy matters more than ever. A well-prepared, correctly priced listing in the right segment is still selling in well under 40 days. A poorly prepared listing will sit, and the market will make that very clear. What you need is a broker who understands pricing to the data, not just the gut feeling. If you want to know exactly what your property is worth right now, book a call. The link is down below. If you're an investor, Plexes remain the most compelling story in the Montreal market. Rent growth is strong. Vacancy is near historic lows. And while transaction volume is lower, the properties that are moving are doing so at strong prices and in reasonable time. The drop in mortgage rates is the signal you've been waiting for. If you have a deal that works at today's numbers, it's worth moving on. Bad deals still don't work. Good deals are moving faster than you think. Here's how I see the rest of 2026 playing out. Transaction volume should pick up meaningfully in the second half of the year. Rate cuts are doing their job. Buyer confidence is improving, and there's pent-up demand from people who've been sitting on the sidelines. Price growth in single-family homes and plexes will remain firm. The North Shore and South Shore in particular are markets I'm watching closely. Condos will stay flat to modest in most areas, with the exception of well-located, well-priced units that continue to transact efficiently. The word I keep coming back to for this market is momentum. We've been in a volume correction for several quarters now, but the price data is telling us that correction is behind us. And with rates moving in the right direction, the setup for Q3 and Q4 is stronger than it's been in over a year. If you're thinking about making a move in 2026 and you want a strategy built on real data, reach out. The link to book a call with me is in the description down below. If this video was useful, hit the like, subscribe, and I'll catch you on the next market update. Have a great day.